You don't anymore.
Okay, let's get right to the bullet points. Number one, I'll buy this stock on the close today.
Oh, you will?
Josh is right. This is an absolutely fantastic quarter. I think what's important is over the course of time, how Dara has changed the culture. Remember what the culture of this company was like under the previous CEO. So first of all, he has completely changed the culture. This is now winner take all. Let's throw up Lyft. What's Lyft doing today?
Well,
Lyft is down 4%.
calls it winner take most. It's not like Lyft is disappearing, but right? Winner take all is a little strong.
Scott, you never want to say a company is disappearing, but I'll tell you what. If I'm an investor in Lyft, I seriously have to be questioning the strategy moving forward. And in fact, should they be thinking of themselves as a potential acquisition target? Within this quarter, delivery was really strong. How is that in such an inflationary challenged environment? So this is a remarkable quarter. MOC, I'll buy Uber, I'll go back in. And like Josh, I will be an investor here.
Okay, so you will be buying that at the close today, says
By the
Joe
time the opening words come out of your mouth from closing bell overtime, I'll have bought it.
All right, good stuff. So let's move and talk about Alphabet, because that really is a significant story today, not only on the stock itself, but on the market at large. You saw what the NASDAQ was doing relative to the other major averages. So there's Alphabet down 8%, falling really on the back of what Microsoft, this big splashy blowout that they did yesterday relative to their investment in AI. Jimmy, I want you to give me something on this. What Jim Cramer called today, okay? The stock was already down. Yep. Then Cramer spoke. I've never been more worried about Alphabet than I am at this very moment. Stock went lower, and now it sits just about at the lows of the day.
Yeah, it's a pretty big down day. I have to say, I think it's a buying opportunity. Now, I own the stock. I own it significantly below market weight. I do have some cash, Scott. I mean, this is going back a few months now, but I did trim Apple back in September. I also sold Medtronic, and I've had about 5% cash just sitting there. Now, you may be asking, well, why not? Why haven't I already bought it this morning? And the answer is when you have a down day like this, it usually tends to crescendo towards the end of the day. So this is something I'm just going to wait and see where it settles. But I just refuse to believe that the stock, the company, is worth 8% less than whatever that is in terms of market cap, $100 billion, right now than it was yesterday. This is, in essence, a brand unto itself. Yes, there is a competitive threat here. Yes, there is a reason that it should be down today, but 8%, I'm having a hard time with that number.
I mean, they're doing their own thing as well. Like everybody is doing this in terms of this being AI and making big investments in it. But what about this move in the stock? What about what Cramer said? Never been more worried about it than I am at this moment. You own it, too.
Well, sometimes Jim can react in an emotional way, and I think it's a big piece of news that, as you said, splashy AI presentation. But Google is #1 in search. They're not giving that up. They're not going to sit around and let Microsoft take a market that's theirs. They're going to come out with their own very splashy day in presentation. I guarantee it will happen. And, you know, it's interesting. Microsoft is up slightly. Google is down a lot. But it's not as if the market really believes that Microsoft is suddenly going to take a lead in this area and Alphabet's just going to let them have it.
I hear you,
impossible.
but let's consider how Google itself it's in the lexicon. I mean, you search for something, you Google it.
Google it.
Right?
Correct. It's a verb.
Now, maybe Microsoft gives you a reason to Bing it or whatever.
Yeah. Well, of course that's possible. And of course there's going to be other players in this field. But Google is going to work hard to defend their turf. It's an enormous turf. It's enormous. So, you know, I think that it was inevitable something was going to happen, which is why Google has been spending billions of dollars on AI for years now. Why they bought DeepMind, I don't know how many years ago, 5 years ago? For this very reason, among others.
Joe, why don't you own Alphabet?
Well, we moved out of Alphabet in late July based on declining momentum. So far, that's been the right strategy, somewhere out around 116. I've never questioned the balance sheet of the fundamentals of the company. I will say, though, when you're talking about chatbot and their platform, which is Bard, and now we're questioning whether there's accuracy in the information that's being returned from Alphabet, that's an underwhelming rollout. I think the street has to admit that. And, you know, 8% down, to your point, is that warranted? I'm not sure, but certainly a lot of the recent appreciation that's going to have a little bit of a mean reversion.
Yeah, if I can just do a little bit more on whether 8% is warranted or not. I mean, there's times when a company has a real problem, and I'll go back 6 months ago with Meta, right, and some of those earnings reports that came out. Now, I'm talking 6 months ago, stock was down big, and you were looking at the company and saying there are problems. You're not looking at Google, or at least I'm not, and saying in Alphabet, saying that this is a problematic company. This is a company that is competing and is going to have to compete, but it does have a pretty good track record of competing successfully. It's also at a multiple that, we haven't seen for this sort of company for some time, around 20 times forward earnings. Now, some of us may say in this interest rate environment, that's still a little expensive.
That's 17 excluding the cash.
Okay, and actually that's exactly what I wanted to say. This is an asset-light company. This is not like a factory-oriented company. It's a cash-generating, cash-heavy company. That multiple is actually pretty darn cheap.